Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large-cap growth and also one of the best-performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon for an update on Nasdaq-100 performance is Shawn Cruz. He's the Manager of Trader Services at TD Ameritrade. As the index continues to outperform, despite a reversal in business reopenings with COVID-19 cases soaring, Shawn, the performance has been quite remarkable as we continue to struggle to open the U.S.
I think so, and that's going to be something that's going to be interesting to see how it plays out on the various indices. Just based off of what goes into those, we just discussed that Nasdaq has quite a bit of that tech weighting, that sort of growth into it, and they've had incredible outperformance this year. Just year to date, up a little over 13.5%. Well, all three of the other indices are actually negative on the year. The S&P down a little over 5%, the Dow Jones down a little over 11%, and the Russell 2000 down just over 14%. So certainly, it looks like that is the play that you want right now if we're going to either halt here in place and we're going to maybe be in this phase 2 reopening a little longer than we expected, as we are seeing that rise in cases. I think the bigger thing for markets, and the reason why we're not seeing too much volatility just in general, is that you aren't seeing a lot of these officials necessarily go back and put some of these more hard restrictions back in place. The sense you're getting is maybe they are going to do things like require wearing masks at all times, and maybe not move forward with further reopenings. We just heard out of New Jersey today that indoor dining at restaurants will not be allowed to proceed as soon as they initially thought, and that sort of makes sense. That you're going to maybe halt in place while we are getting this spike to see if this sort of can just get through this mini second wave we're experiencing right now. So I think the other thing to look at as we start to reopen it is watching the behavioral response from consumers. That's another thing that we really wanted to see, and that was how are these companies that have benefited during this lockdown. A lot of those companies were NASDAQ type companies. All those big tech firms were sort of seen as the beneficiaries that we call the stay-at-home trade. Are they going to be able to keep those users and keep some of the sales on their platforms even as we reopen, or is there going to be a little bit of a shift back into sort of the way things were before? Because a lot of these companies moved to subscription type revenue models, and it's great getting new users on, but the value of those users is that they almost provide a stream of income into the future. So if everyone just leaves those platforms right away when we start to reopen, that actually can impact some of these companies that use that subscription-based revenue model. So it'll be interesting to watch how that plays out as we get more reopenings.
It certainly will. And you also have a chart here of the Nasdaq-100 futures, the NQ. What can I tell you about price level and the volume that's building up at certain levels?
You do. So I do like to look at the Nasdaq futures because there's actual contracts volume being exchanged. So you can see where there's spikes in volume, and we look at those price levels where you start to see a little bit of a peak there. So the bulk of the volume, if you do look at that, you notice that that red line is around 9,100. But if you look at where we've been at lately, just under 9,800 looks like a little bit of an interesting price level. It was resistance earlier on in the year. We've been able to break through that, and it looks like it's actually held as support on the downside here recently. And we're starting to see a little bit of a peak build up right around that 10,000 level. So that's actually a good sign when you start to see volume building up at a given price level. It shows two-sided trade where there's nobody really strong conviction-wise on the selling or the buying front. It can actually be a way for prices to stabilize here. And I think when you're investors and you see these kind of run-ups, you do eventually want to see some sort of price stability. It can help provide a base for further upside in the future.
Of course, if we take a look at our next chart here, FOMC Minutes tomorrow is also going to be a market-moving event.
It is, and so the FOMC, you notice that sharp spike in the size of the balance sheet as the Fed's gone through quite a few monetary policy changes lately to help be accommodative on the financial front. So look at tomorrow, we get the minutes. It's going to be interesting to really see where everyone was at in the room. If everyone was more or less in consensus, whereas there may be quite a few people who were maybe either a little bit more hawkish or want to be even a little bit more dovish. Look for news on things like interest rates, inflation expectations, the impact of growth on, say, some of these bigger companies, how it impacts the financial system. I think there's going to be a lot of interesting little nuggets, so to speak, to be gleaned from the minutes from the Fed tomorrow that can give us an idea of how we should think about what the Fed might do moving forward based off where they're at in that last meeting.
All right, and let's wrap up with the gym from home trade with Lulu buying Mirror. And of course, we have to talk about Peloton. I think this is a super exciting place to be in the market, also as a consumer of Lulu and Peloton. It makes you wonder what it's going to look like going forward with home fitness solutions, because anecdotally, I love the gym. I love the classes. I love my friends there. I love the competition it affords. But I'll tell you what, these work from home solutions are pretty incredible.
It was very interesting for Lululemon to make this move. It wasn't like they went out and bought maybe another clothing brand or something that was really adjacent to where they're at. They really went out almost into the sport equipment industry. And it does look like it could be an interesting pairing with their product line, because one, it is a little bit, Mirror is a little bit more of a high-end premium product, but they also, Lululemon's been a beneficiary of the stay-at-home trade, because I mean, Jill, I can't tell you when the last time was that I actually needed to wear jeans just to go out on a day-to-day basis or put on a full suit for anything. But I've been using a lot more athleisure loungewear type of clothing, and it looks like when people are getting stuck at home, they realize they probably wanted some more comfortable clothing. This is another interesting step in that direction, where now you have Mirror, that's a device you put up on your wall, and you can sort of get those workouts in. It's going to be interesting if people go back to the gyms after we start to get some reopenings. The gyms in New Jersey are still not open. It'll be interesting to see when they do decide to go ahead and let that happen. But that has important implications for a name like Lululemon making a purchase now of Mirror. You're going to want to watch that. But then also, if you look at Peloton, Peloton's been a major beneficiary of the stay-at-home trade, because it satisfies two needs that we really have. One is the fitness need, but it's also got that social angle to it as well. And right now, if you're on lockdown, people start feeling a little bit more isolated. You start to see people want to go on the Peloton, not just for the health benefits, but also it's a little bit of a social aspect to it as well. And that creates a very powerful network effect that can actually help keep users maybe on the Peloton network, because once again, they use the subscription model. You get the installed base of bikes, but then you also have to pay that monthly subscription fee. That's what Peloton is also counting on. So that's why you want to look at some of these companies that are really benefiting from the concept of subscription-based models. If a gym reopens, do I cancel my Peloton subscription and just go back to doing what I was doing in the gym? Or do I still stick with the Peloton? I think that's going to be something interesting to watch as we start to reopen. And when we do get gyms to reopen, I think there can be implications certainly for Peloton. And now that Lululemon has exposure to that industry, also going to want to watch Lululemon now when we start to get some of those more of those gyms reopened.
Yep, all great points. Thanks so much, Shawn, for joining us on Trade Talks.
Thanks.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.